We may have a few stragglers, but that is okay. If you hear a little beep, that's just like a ding, a
Yeah.
doorbell. That's people trying to come in. So thrilled to see some new faces here and familiar faces. I'm Nicole Kittredge. What they call us, the reverse people, is a forward mortgage professional. And I had never heard that term until I started meeting and talking to the reverse loan experts here. So today I'm thrilled to have Cindy Perham. She has lots of experience with reverse mortgage lending. I feel like I have a basic knowledge. I'm so glad to get some really great intel today. Cindy does welcome questions, but keep in mind this is recorded. So if you want to talk to her online for anything specific, she's absolutely open to that. So hopefully that's a good enough intro for you, Cindy. I'll let you take it away.
Of course. Thank you so much.
You're welcome.
And I wanted to just say welcome to everyone today. And yes, I'm Cindy Perham. I reside in Fairfield, Connecticut, and I am the area sales manager here at New American Funding for all of the New England states. So as Massachusetts is the center and the heartbeat of that, I'm so happy to be a resource to you, Nicole, and all of your referral partners. And I also wanted to just say that this presentation, although it's being recorded by Nicole, we also can present this to you specifically at your offices, or if you just want to like do a one-on-one, I'm always happy to be here for you. And yes, so we do call you forward loan officers, Nicole, or conventional financiers, but I know you do a heck of a lot more than that. So without further ado, I'm going to get into the presentation, just tell you a little bit about myself. Okay. And I am 35 years in the industry. I started doing reverse shortly after they were actually signed into law by Ronald Reagan in the late 80s. My manager at People's Bank here in the Fairfield County asked me to learn about them on my way to a hospital room where a gentleman was going to need some home health care and had no other way of accessing equity in his home other than a reverse. So I was thrilled to learn about it. There are only 800 loan officers in the country that actually do reverse mortgages. So we are a very specialized program, but that means we really delve into every facet of reverse, and we are specialists. I've actually loved, I put here in the bullet, I love allowing my clients to use a reverse mortgage, whether it be to stay in their home or in today's case, to talk to you about buying their next primary residence with a reverse. And although the government program started at age 62, we have proprietary programs with the same lenders that start as low as age 55. So we have something for everyone 55 to well over 100, as some of our clients have obtained that age as well. So today we're going to talk about what's a reverse mortgage, talk a little bit about the economy and who's looking for these types of loans. What are some advantages? And as a realtor, what are some advantages to you presenting this to your clients and other people that work with seniors? We don't even call them seniors. I call them tweeners, because really I don't consider anyone a senior unless you're like 85 and up. And even then, many of those people are so active that we just, work with clients, and we're just so happy to work with all the age groups. We're going to talk about how the reverse works and maybe a couple case studies so that it could really hit home how this can help you and your clients think about using a reverse. Because with a reverse mortgage, there's no principal and interest for your client. They will be responsible for other property charges, but just having that extra money in their pocket is such a positive thing in this economy. What are the safeguards put into place with a reverse mortgage? And then next steps for how to present this as a realtor or financial planner. So what is a reverse? Well, the reason it's reverse, it's a little backwards, right? We don't expect a payment. We don't require a payment on a reverse mortgage. So we call it similar to a HELOC because, yes, it's a line of credit that one can draw off of if they're using one to stay in their home, let's say as a refinance. So not necessarily to purchase in this case, but having a line of credit where they can use it as needed. Interest will not accrue on it until they use it. And even then, interest and principal is not due and payable until well after they sell their home. We're going to talk specifically on this screen about the HECM, Home Equity Conversion Mortgage. That's the government-insured reverse mortgage. One borrower at least must obtain the age of 62 by the closing. The other borrower, if there's two, can be younger. That's not a problem. We offer both what's called the HECM, as well as proprietary programs, which kind of are the jumbo program, and those start at age 55. When I say jumbo, so FHA has a lending limit. We don't acknowledge values with a reverse over 1.209 million, whereas our jumbo reverse products that start at age 55 actually acknowledge values as high as 10 million, and we can loan over $4 million with a reverse mortgage for both purchase and refi. Feel free to stop me anytime if any questions come up.
Okay.
Again, this is for purchasing a primary residence, which can be a 1 to 4 family, or refinancing a current primary residence, also 1 to 4 family, and condos. If the condo's approved FHA, we can do an FHA approved reverse. If we need to help your client get the condo complex approved, we will do that as well. Any other loan, we're never going to have you off the title. The client is on title. It is never given to the bank. There's a lot of myths out there like I'm giving the bank my home. No, you're not. The title is in the client's name and always remains that way. And if they pass, then it goes into the estate. And that would be treated like any other mortgage. What is owed is basically what was borrowed. So closing costs, amount taken up front, and any amount taken during the life of the loan plus interest. What happens when someone passes away and they had a reverse mortgage? Their family has between 6 and 12 months to make a payment to either buy the home or to sell the home. So it's quite a bit of time there. Any questions so far? Okay.
Sounds like, just from my experience in working with estate planning attorneys, that if someone's going to do this, they should have their estate all buttoned up, have a will in place,
Yes.
trust, etc. You don't want to have to go through probate, which can take over a year.
Yeah, that's so good you mentioned that. We actually have an issue right now. One of Tom's clients, he had a woman who just passed in her home here in Westport, Connecticut, and the son was caring for the mom in the home. And the mom passed, and we found out that the way the mom had left her home in the will was half to her son and half to her husband, who's receiving Medicaid in a facility. And we are very concerned that the son may not be able to buy this home outright because the government may be taking half of the equity. So you're absolutely right, Nicole.
They will. Unfortunately, that's not a good situation. The government's definitely going to want half that.
Right. And that's going to prevent the son from, unfortunately, being stay in the home. So you're right. Having a trust in place, having a will, having power of attorneys. Power of attorneys really before they're even needed, right? Because we want to make sure that when a client who may need to use a power of attorney to conduct the transaction on a reverse, that the power of attorney is in place if there is some kind of an incompetency issue. So who's eligible? Anyone who's 62 or more, one borrower can get the reverse mortgage that's done through the federal government, U.S. citizen or permanent resident alien. They have to occupy this as their primary residence. And we love snowbirds. We have many clients that live in Mass and have another place in Florida 4 months a year. As long as it's their primary residence, we are fine with it. So they live in Mass. They do their Social Security is all sent to their home in Mass, or their accounts that are labeled Massachusetts, and their driver's licenses in Mass. So we're fine with all of that. And if it doesn't work where they do live in Florida more than 6 months out of the year, we'll do the reverse on that property if available to them. They do receive counseling. They receive either HUD counseling for the government approved loan, or they receive proprietary counseling done by the same counselors, but just discussing how that program is just a little bit different. For one, they save a lot of money by not paying FHA mortgage insurance premium if they do a proprietary. But we'll get into the details a little bit later. They do have to maintain their property, their taxes, their insurance. And actually, some people use the proceeds of the loan to do just that, right? With taxes going up and homeowners insurance, thanks to all the states around us that have many, many claims, our insurances have gone up 30% maybe in many cases. So a lot of times people will get a reverse refinance strictly just to like pay their property charges and be comfortable, live comfortably in their home. What type of property? As I mentioned, FHA approved condos, 1 to 4 units, and even manufactured homes. So we have all kinds of options for our clients. Here are some of the myths we talked about earlier. The bank takes ownership of my home. No, never, not with a reverse to purchase or refi. Your homeowner always stays in title and it's in their name. And if they pass, it goes to their estate. The home can't be passed on to their kids. No, they would inherit it just as they would with any other mortgage. And as Nicole mentioned, as the will is stated, all the borrower's equity will be gone. Well, actually, with a reverse mortgage, the amount that we lend, whether it be purchase or refi, it only goes from about 30% to about 65%. So somebody in their very early 60s may only be getting about 30 to 35% loan to value. Whereas somebody who's reached the age of 90 may have access to about 65% of the value of the home. So many cases, we're not giving the borrower that much of the equity. So it's usually not gone. Yes, if they keep it for 20 plus years, it's going to eat into the equity, right? Because it's a negatively amortized loan. Interest continues to accrue. I have a customer actually here in Connecticut who got a reverse mortgage in 2006, and she maxed out. Oh, go ahead.
I just said,
yeah, she maxed out the entire amount, and she lives in a very modest ranch. And probably from 2006, her value only went from about 250 to about 330. Even in this great market for homes, it's a very dated home, a very small lot. So when she passed, her reverse mortgage was $380,000 balance because she had it for so many years and utilized it all up front. When she died, her daughter said, "Oh no, my mom owes 380. Her house is only worth 330. What's going to happen? Am I responsible for the difference?" Well, no. It's a non-recourse loan. So heirs or borrowers are never responsible for the difference between the balance and the current value at the time of death.
wow.
And the good news on that is that a family member can purchase the home from HUD for 95% of the value at the time. So we would take the 330, the current value at the date of her death, and we would take 95% of that. And the daughter actually bought the home for 95% of the 330. So that saved her about $100,000 thinking she was going to have to come up with. So that was great for her. She was able to downsize her own home and live in the house she grew up in, and no money was exchanged. So you really don't have to worry that any debt will be brought to the heirs. So
That's a really great story, Cindy. Thank you.
Yeah, it's perfect. And then many people think that the reverse mortgage is like, oh, I really have no money, so I must need a reverse. Well, no, actually, many financial planners feel that the reverse mortgage is a very powerful financial tool because what's happening, especially in this economy, you know, Betty down the road at her condo is taking $3,000 out of her portfolio every month to live her life. And financial planners are saying, listen, Betty, your money's not going to last as we thought it would to the age of 95 plus. Why don't you start taking money out of a reverse and then maybe supplementing it with your portfolio? So, you know, half from the home, half from the portfolio so that the money will last longer with the financial planner. So believe it or not, many of our referrals come from financial planners for that reason. So they can continue to manage a very hefty portfolio on their client's behalf. And this is very interesting. Many don't know that 62 years old and older have over $13 trillion in equity. So this is good for realtors that are looking to have clients sell their home and downsize, or also, again, get a reverse mortgage to stay in a home. So there's so much money available. And really, I think as the country, we've only hit the tip of the iceberg on the opportunities using a reverse mortgage. You're going to see them continue to grow. This untapped equity can be used for either staying in the home or maybe cashing out, right? And buying something that makes more sense. I know that being a member of the Senior Tax Relief Committee in my town, I had a client who was, she bought her house 25 years ago for like 45,000. Now it's worth like 800 grand, right? So her taxes are like astronomical because it's based on her value, right? And she's like, I don't know what to do. I guess I'm going to have to sell and rent. And I was like, well, you could sell and take your proceeds and put them toward a purchase of a smaller home. And because she's 80, she's going to get 50% loan to value with a reverse. No principal and interest ever due until she leaves the home permanently by selling or passing. So in her case, she's going to take that $800,000 house, buy a $450,000 smaller home, and she's going to get 225 from the reverse, and then use some of her proceeds to be able to buy that home pretty much outright, right? And not have to have a mortgage payment. So that makes her happy because she doesn't want to leave town. She raised her 4 children in that home, but wants to stay in the town that she did that in and wants to remain as part of the community. So there's so many great success stories where clients can no longer have a payment. And then what she does have left in her proceeds, she's not going to be so worried that she's going to run out of money paying, her taxes and insurance from now on. This is just to show you that back in 2022, I know this is a little dated, but who owned a home and who was actually, who owned homes? Well, 55 to 64%, about 80% of them own homes. So, and that's still probably the case. So it's like you have so many people that own a home, they could tap into this equity again to either purchase a home or to stay in the home, and refinance it with a reverse. So 80% of people in this age group do own a home, and that's just an important statistic. So as a realtor, if you're a realtor on this call, how is this going to help you? Well, personally, you're going to have more sales because clients aren't going to be so worried, right, about, I don't know if I have enough money to even downsize in the town I want to stay in. This is one way for them to do that. You're increasing your buyer's purchasing power because we're actually lending your clients between 35 and 60%, depending on their age, without a principal and interest payment. So they may decide they would like a larger home because now they can get a reverse and not worry about having to pay a P&I payment. We can talk with people in 55 and older communities. We can talk with people in townhomes, and just make sure, like, if you know builders that have 55 and older communities that they're building, that we can market it to anyone there for either purchasing a unit or refinancing a unit. So there's so many new things to discuss as a realtor, kind of widening the arena. What's the advantage for someone buying? And is they're going to have more money in their accounts, they have more money for other retirement needs, and no longer have a principal and interest payment. Again, you can make a payment though. So you're never allowed to not make a payment. So you can make payments on reverse mortgages without a penalty. And some people do that, right? A gentleman I knew wanted to get $300,000. He lived in New Hampshire, but he wanted his children to inherit this lake house. So what he's doing is he's paying whatever interest accrues on the mortgage every month, so that when he passes, his family will only owe this $300 that he started with. He's paying the interest because it behooves him to do that, as his grandfather or somebody built the home and he wants to keep it in the family, and he doesn't want to have a big debt on the home down the road. So this is some way for him to kind of control that. What he passes on to his heirs is protected. So don't worry about making payments. You're always allowed to. You just don't have to.
Cindy, is that the same customer that had really high taxes on the lake house and couldn't keep it?
No, it was a different one. Yeah.
I like that story too.
I know there's so many good success stories, and Tom will tell you too. We get so involved with our clients. We are basically their person for life. We know that this is a protected class, and many of our clients are well past retirement age, and we always let them know that we're here for them as their life changes too, and how to make their life, a little more easy and streamlined. So once they work with our department, you'll see that they're always part of our family. Now, what are the reasons, as most realtors know, relocating and why people do this? Well, first of all, they want to either upsize or downsize to be closer to their family. They may want to live in a condo complex or 55 and older community that has HOA fees, and that would be something that they don't have to maintain anymore. Then they may live on a fixed income and they want to increase some buying power, so they want to, get maybe downsize their home. Also, physical needs change, and I know for myself, when I'm buying my next home, I'm going to want my bedroom on the first floor. I may not want to do stairs any longer. Or some people just want to purchase their dream home. I have a family member now who's purchasing a dream home, again, in New Hampshire, and wants to have the perfect home, 5 bedrooms, all the grandchildren coming to visit as often as they want. And that's a bigger home than they live in now as empty nesters. And this is a perfect way. So when he buys a house, let's say it's $1 million on a lake in New Hampshire, because that's pretty much how much they are right now for a 5-bedroom.
Yeah.
At age 65, he's going to get about $350,000, and then the other amount of money will come from the proceeds of his sale of his home here in Connecticut. And now he has his home. He doesn't pay principal and interest, and has like maybe a larger home than he would have thought about purchasing, should he not have gone with the reverse mortgage to save him that. I want to show you just a couple things. We won't get into too much of these, a lot of words on one screen, but what is the benefit? I mean, obviously, Nicole is going to do the best job with a conventional mortgage, and many of our clients are going to go that way. But what are the benefits of using the reverse? Well, first of all, there is an age restriction. So is that a benefit? Well, you do have to be 55 and older for the proprietary. Again, those are like a jumbo or maybe a condo that isn't FHA approved. So you do have an age restriction where you have to be at least 55 on proprietary at the closing, and at least one borrower has to be 62 on an FHA approved reverse. No monthly payments are required. Again, you will still have to pay your property charges, HOAs, taxes, insurance, but you can use the proceeds for that and remove the money from the credit line as needed. Now, remember, with the reverse, the equity is decreasing because this is negatively amortized. It's kind of like no payments due, so you're going to just have the interest continue to accrue. So that's the biggest difference between conventional and reverse, where your liquidity is, your equity is increasing on a conventional loan because you're making principal and interest payments. Again, the borrower owns the home regardless of what type of mortgage. You must pay all the property and maintenance fees. Non-recourse loan, that was like my example where the daughter bought the mom's home. We never pass on heirs to the family after the death, even if the house is underwater. So that is true for both FHA as well as proprietary reverse. So never have to worry about that. One of the a big benefit is contributing toward purchasing from the departure home. So basically, if someone's looking to downsize or upsize, they would contribute toward the purchase with the equity, and that plus the mortgage proceeds would be what they need to purchase the home. And this way, they could kind of keep money where they want it in their coffers in their bank. They don't have to use their cash. But like Nicole, you're probably saying people want to pay cash for a house because they want their deal accepted, right? In some cases.
I mean, being a cash buyer statistically can get you a better deal. The numbers are going down and the market is shifting a little bit to be not as much of a competitive seller's market. So hopefully that's right. The pendulum's swinging this way, so it's not quite as competitive.
You're absolutely right. Yeah, I agree. And then how the reverse mortgage works for real estate professionals. Basically, your clients would purchase a home without using just cash, not having to liquidate their savings in order to buy that home or get that offer accepted. The contracts are written up the same way. They're just using a reverse mortgage to purchase it. They can, again, as we've said before, find something that might be bigger than they thought because they're going to be financing a portion. You can also refinance a property with a reverse and take those proceeds to purchase a second home or an investment property. So I do see that quite often, not too much, but where somebody here is looking to buy that cute little condo in Boca, right, to get away from the winter, and they have a nice house in Massachusetts and they have some equity. And they're like, let's see, I'm 75, I can get about 45% with a reverse. Maybe we'll take some of the money out of our and get a reverse mortgage on our primary residence in order to pay cash for a nice small condo down in Florida, it could help them make that decision a little bit easier for them.
Great.
So we love that. And then also real estate professionals are our biggest clients. So when we talk to realtors about reverse to purchase, we do we find that many of our real estate professionals become our clients and they get a reverse for themselves, especially in this market when maybe their income is changing, depending on how the market is, and they think, this is a really good product. Kind of like our department, we're all like, we might do this ourselves because it's like, what a great idea in order to keep more money in our coffers. And then real estate professionals can also refinance their clients. Well, we already said this, but using it to buy a vacation home or an investment without a monthly mortgage payment. So how do we determine how much money you can get with a reverse? Well, it goes by the youngest borrower. So if you have a couple who's like 68 and 63, we use the borrower who's 63 to determine how much money we're going to give, because if one of the borrowers passes, the other one stays in the home for as long as they live. So it's not like it's due and payable when one borrower passes. So in this case, if they're 68 and 63, we base the amount we can give them on the youngest borrower's age. So we're going to give them a little bit less than if they were both the same age, okay? Because that other borrower is 5 years younger. And that's why I said a good example is a 65-year-old is going to get about 35%, a 75-year-old is going to get about 45%, and about a 90-year-old is going to get about 65%. But that changes. It changes as the rates change. So right now the rates are about 5 7/8, 6% on a reverse. So same as kind of like where the conventional loans are that Nicole offers. But 4 years ago, right, when the rates were like 3.5, that 70-year-old wasn't getting 45%. They were getting more like 55% because we're basing it on the current rate environment. So as rates go down, we're going to have higher loan to values to offer our clients, which is really good. Principal limit factor is basically just that it's that percentage based on age. Of course, we're going to look at home value. We're going to do an appraisal. And FHA, just like regular conventional financing and with FHA, they could ask for a second appraisal. Only about 14 to 16% actually need a second appraisal, and they're going to go with the lower of the two values. And the max claim amount is basically what we call the appraised amount, and that's all. That's just our terminology for that. So how we determine how much someone can get is, again, it's based on the youngest borrower because chances are they're going to be living there the longest. So the loan to value could be lower. I literally had a customer who was 68 and his wife was in her 40s. We had to base the amount we gave them as a 40-year-old. But now you're saying to yourself, but they're not 62, Cindy. Well, you're right. So what happens is they're considered a non-borrowing spouse. So you could always have somebody who's under 62 doing a HECM mortgage or FHA reverse, or doing a proprietary, well, let's just work on the FHA. You can be under 62 if you're a spouse of somebody that is at least 62, but we're going to base the mortgage amount on that 40-something-year-old age. So now you're talking like they may only end up with about 20 to 25% loan to value because her age was so much lower. So as a non-borrowing spouse, if her husband passed, she can still stay in the home for the rest of her life. So that's a really good protection that FHA provides when you have a non-borrowing spouse, someone that has not obtained the age of 62 at the time the loan closed, because they are a spouse of the borrower. So they are protected by the government that they will never be asked to leave the home, but they will have to continue to pay their property charges. And if there was a line of credit accessible when the other party passed, then that is no longer available because they're not a borrower. But they do have the rights to stay in the home for the rest of their life, which is a really good protection. Okay. So basically when someone is buying a home with a reverse, It's the costs minus the contribution from the reverse mortgage, obviously. And what are the costs to do a reverse? It's like a regular mortgage, except we do have a upfront, which is paid as part of the closing costs, and it's financed. 2% of the value goes to the federal government and sits in the HUD account. And this is how this program continues to exist. So this has always been the way, where a percentage of the value goes directly into HUD. And this is how lenders make themselves whole should there ever be a short to close down the road. So again, how $1 million home is going to pay $20,000 into this account at HUD. A $400,000 home is going to pay $8,000 into this account. What if the value is $2 million and they want an FHA reverse? Well, it caps off at $1.209 million that we acknowledge, but that still means that about $24,000 would go to HUD as one of the biggest closing costs to do this. This is not a fee on the proprietary non-FHA loans, okay? However, the rates are much higher on the proprietary, at least 2% higher. So FHA is really the first place we look to help a client. Any questions on that? And the origination fee depends on the loan product, but can range from $2,500 to up to $10,000 depending on the program. But for FHA, it goes from $2,500 to $6,000. So a home valued at $400,000 or more does pay an origination fee on purchase or refi of $6,000. And then regular third-party closing costs, Nicole's used to seeing is, the appraisal, the title, the actual processing, and if second appraisals are needed, tax stamps, things of that nature. So any other third-party closing costs. Those are all financed. So the great thing about a reverse is there's really only two upfront costs. One is everyone in the country that gets a reverse mortgage does a counseling. We are not allowed to take an application and submit it unless we know that our clients have been counseled. And that means they speak with a HUD advisor about the loan, and they look at our proposal to make sure everything is on the up and up and all the fees are appropriate and the rate. So that protection costs anywhere from $125 to $200 depending on who they call, and that's a requirement to proceed with any reverse mortgage that we offer. And then the only other costs they're going to pay, actually that's it. Everything else is financed.
Question, Cindy.
Sure.
You mentioned that they're going to talk to the counselor and show the proposal. Does that mean they're applying with you first and getting a quote in writing?
Yes, they're going to get a quote in writing.
Okay, so they can apply.
Mm-hmm.
They just can't proceed and close until they've gone through counseling.
Right. So they can apply prior. There are a couple states, none of them are in New England, that you do have to speak with a counselor before applying. We just can't order services, title, or appraisal until the counseling's been completed by all parties. So if a client has a mom needs a POA because she has incompetency issues, dad doesn't need a POA, the POA plus dad would have to be counseled prior to us ordering a title or appraisal on purchase or refund.
Like an online course they take? Is it a
phone? It's a phone call.
Phone call. Okay.
And it typically lasts between 30 minutes and 45 minutes, depending on how many questions they ask. And they're not qualifying them for the loan in any regard, but they're going through a loan comparison screen, an amortization, a list of closing costs, which we've already explained to them completely up front. So it's really just a validation of everything. And 99.9% of the time they go forward with the loan after the counseling. There are times where they're they're not sure if they want to go through it right away, but it's a good validation, and it's because it's a protected class of U.S. citizens that we want to make sure have the opportunity to have this unbiased party kind of go through the loan with them.
Makes sense.
And they could do it in person too. We have to legally give them a list of 15 counselors, 10 are nationwide counselors, and then 5 are local that they could drive to if they wish to. They're within their zip code area. And that would be for someone that wants to just have a face-to-face. That's allowable as well, and the fee is the same.
Great.
But I'd say most people just do it over the phone, especially when they might want to have their children involved, and they might want to have their children just listen into the call, because they might have talked to us as well, but they want this counselor that mom and dad are talking to they want to also hear what they're saying to make sure that they're saying this basically the same exact thing we are. So we invite that, and they don't appear anywhere on the counseling cert, but they are encouraged to be participants.
Hopefully, if a counselor saw an estimate with really exorbitant fees, they would tell them it's a bad deal.
They would actually say
Love it.
that margin on that rate is astronomical. Call someone else.
Good. I love that.
Yeah, it's
Consumer
great.
protection.
I know, we love that too. And then repayment. I kind of went over this already, but when is this loan paid? It doesn't have to be repaid till all borrowers pass away or sell the property. Or they can refinance it. Sometimes if the rate goes low enough, let's say our clients that applied last year when the rates were close to 8, let's say the rates go down to like, 5, then they can refinance the reverse. And the good news about that is they don't pay that MIP or mortgage insurance again. So that $6,000 or $20,000, whatever it is, they do not pay that again. So we keep the fees very, very low if somebody wishes to refinance a reverse mortgage. As I said a couple times, no debt is ever passed to heirs. They never have any liability to any additional debt. I mean, it could be a case where they don't get anything because maybe mom and dad use the home to live comfortably and not ask their children for help. And now they do at the time of their passing because of medical bills and other things. Maybe they don't have the equity, but there's no additional debt that's passed on. And that's what's most important. And as I mentioned, my client whose daughter bought the home, family members only can obtain short pay. It doesn't affect their credit, nobody's credit. They just buy mom's house or dad's house for 95%. HUD will send out a free appraisal at the time of death and will allow the family member, only the family member, to purchase it for 95% of the value and make that their primary residence.
That's
or
something new to me, which I
yeah, it's really important.
Yeah.
I'm just going to go over a couple case studies. I won't spend too much time because every one of your clients is going to have a different kind of scenario, but here's just kind of an example of a 70-year-old at the rates right now. Right now, they're closer to 6, so the numbers are only going to be off a couple thousand, but when this slide was done, the rate was like 6.3, but it's very, very close to what it is now. If they were 70 and they had a current home of $500,000 value, free and clear, but they wanted to downsize and find a little condo somewhere, they could pay cash, right? And then they would have $150,000 left in the bank if they had no mortgage on this $500,000 home they just sold. But if they used a reverse to buy that $350,000 condo, they had a free and clear home, they want to buy a $350,000 condo, based on the age of a 70-year-old buying a $350,000 condo, we're going to give them approximately $125,000 with the reverse. That means they're only coming to the table with $225,000 instead of $350,000. So now they have some more cash for their own retirement, a little extra cash.
That's a lot. That's a big difference.
Right. And that's what people kind of want right now. They want the security, having a little bit extra money in the bank. And this is another kind of example too, where you have a 65-year-old empty nester, again, wanting to also basically buy something similar, right? He has a home, they have a home for $700,000 value with a small mortgage, $150,000, but they want to buy something for $750,000. That means they're going to have $550,000 from the sale of their home, and now they have to get a mortgage, right? They're going to get some kind of mortgage for $200,000. That same client who has a home of $700,000, paying off a $150,000 mortgage, but wants to buy a $750,000 home somewhere else, they would take $550,000, which would be the difference here. Yeah, the equity. And then we're going to give them, based on $750,000 at age 65, we're going to give them $250,000. So about a little over a third toward this home of $750,000. And then they're going to have this much extra cash in the bank. They don't need to have a payment now on their reverse because we're giving them this much money Interest will continue to accrue. They'll pay their taxes and insurance on their own, but now they don't have a principal and interest payment like they'd have here. And they also have almost 50,000 in the bank.
And they
So,
can
and
use
that
the
again,
proceeds to pay the taxes and insurance. Or
they can. Yep. And we can actually set that up. I'm glad you mentioned that, Nicole. If they have enough money remaining, we're able to set it up where we actually pay the town, the municipality, the taxes, and we pay the homeowner's insurance. So we can escrow for clients that are used to having escrow with their regular primary mortgage that they got through you. They may decide with the reverse that they also want to have us pay the taxes and insurance.
that would be a no-brainer for me. Set it up.
Yeah.
And it's paid.
I know, set it up is right. Exactly. This is just one more example. If somebody was upsizing and they're 70, they have a home worth 500, they're buying $650,000 home. So they're going to sell it for 5 and they're going to have to spend 150, maybe get a mortgage, right? Or they can get a reverse at age 70, approximately 227 on a 650 value. So now they're only putting in 422 instead of the full 500. So now again, more cash in their pocket instead of having to come up with 150,000. Now they have a surplus of almost 80. And there's one more example I really want to share, and I'm going to skip to it before we finish up here. Okay, many times we have attorneys that we work with, and there's somebody who is getting a divorce. And in this example, we have a 63-year-old, let's say 63-year-old spouse is going to stay in the home. And they have the ex-spouse who is going to be leaving the home. So realtors can benefit from 1 or 2 mortgages in this case. Not that we're celebrating the fact that this is a divorce situation, but this helps the homeowner buy a home with relatively little out of pocket, or at least less than they may have thought. So we have the spouse that's remaining in the home and their home is worth $625,000. They're going to stay in the home and not have a mortgage payment anymore. They're going to get a reverse mortgage, okay, and they're going to pay the ex the $183,000 based on the 63-year-old's age. And now they're going to pay this departing spouse so that that departing spouse can now purchase a home with this much of a reverse mortgage. And then they, they can go on to purchase their own primary residence. Okay, so that's one way. This is the person, they're both getting the loan, but they're saying, listen, we're going to buy you out. We're going to give you this $184,000. Now you've got an amazing down payment on a new home so that they don't have to go out and rent. And there's another example similar. Both spouses decide to sell the home that they were married in and raise their families. So again, she's 63, he's 68. Their home was worth $625,000. So they each get half of the equity of that. She's going to buy a new home for $385,000. And we're going to give her a reverse mortgage at her age of 63 of just about $100,000. And that gives her an additional $27,000. She's not broke. She's got money in the bank and whatever other investments are part of the divorce settlement. So she's got money and she now owns a home that she can manage for $385,000. He also will receive half of the proceeds. That's assuming this was a free and clear home. And he goes to buy a home for $408,000. And at his age of being 5 years older, we're actually giving him, after fees come out, he's going to net about 30% of what he's going to buy the home for. So now we're giving him $120,000 with a mortgage, a reverse mortgage based on a 68-year-old. And then he's putting in $288,000. So he also got some money in the bank after. So 2 homes can be sold when there is a breakup of a couple. This is actually something that many of our silver divorce attorneys specialize in, and they do assist them with making this happen so that both people land comfortably on their feet.
I'm going to guess this scenario is more common than the last one.
Yes, most of the time it is. But there are like sometimes siblings that buy out another sibling, right? So, I had a couple in Duxbury, Massachusetts, where the mom passed and left it to the son and the daughter. and the son could only get like 200,000 on a 655 value. The daughter said, "Listen, brother, I'll just take the 200," which was really nice of her because she really deserved 300 plus. And she ended up just taking the 200. So now he's able to stay in the home, and she moved to South Carolina where she wanted to live anyway. But she took her 200 and she bought a home down there. But this was a way for him to live in his family home and not have to ever pay a mortgage payment. So that really worked for him. There are safeguards, like I mentioned earlier, mandatory FHA counseling or proprietary counselor, depending on the program. Financial assessment, I won't get into it, but we do qualify these clients. It is an underwritten loan, but we're not FICO score driven. So not to worry about FICO score. We just kind of make sure that taxes have been paid on time. And if they weren't, it's not a problem in many cases. We will just escrow for taxes and insurance for the life of the loan if it works for them. Again, I mentioned non-borrowing spouse. They always are protected with any kind of reverse mortgage to stay in the home if they were not a borrower at the time of the closing, but they may not have access to any additional funds. Prepayment penalty, there are none, not in 6 months, not in a year, not ever. And on a reverse mortgage through the government, there are initial draw limitations the first year if we're not paying off a mortgage. It's usually like a 60-40. So if we're giving them 100,000 on a reverse, they might have access to 60 the first year and 40 the second year. And with the purchase, they typically use the entire amount available because they need it to buy the home. But of course, I'll go over specifics with everyone when they have examples to ask me. So again, for the realtors on the call, this is going to be one great way to separate yourself from the competition, that you have a reverse specialist, that Nicole and I work together as a team. I'm an extension of her office, and I'm always available to help a client. I could turn around a proposal within an hour or at least by end of day so that you know what your clients can qualify for. This is one way for you to hopefully change your earnings. And as you become a specialist, possibly working with seniors, or maybe you already are. Again, most people in Massachusetts, for sure, we have programs for 55 and older and 62 for the government program. So we have so much for all of your clients. What are your next steps? Just know that we're here in your corner. Maybe you want to become a senior real estate specialist, and you already partner with me and of course Nicole, and we're going to be here for all your needs. So this is my info. I know Nicole will make this available to everybody, but I'm just so grateful to be a resource to you and all the people that you come in contact with.
Thank you, Cindy. Question for you.
Sure.
For the scenario you gave where there's a 40-year-old spouse staying in the home for the rest of their life, never making a payment.
Mm-hmm.
That person has no access to reverse mortgage funds because when the spouse died, the line got closed. So as long as that person is making taxes and insurance payments, mm-hmm. behind the scenes, whatever loan that spouse had, it's growing, right? There's interest accruing.
Right. We're going to show them the amortization.
Mm-hmm. Sells. So this is right. where somehow it can end up being that if this person stayed there forever until they pass, and then mm-hmm. the balance is higher. I'm just trying to get my head wrapped around how do they end up owing more than the house is worth. It's a relief to know they don't get stuck, the heirs don't get stuck paying that difference, and the homeowner, the family members can purchase a home at 95% of that current market value. But how do they offer loans like this that could end up being upside down? Like that doesn't make sense.
Right. Well, in the case of that woman that was in Westport with her husband, he was again 68. She was, I think she was around 45. So we're basing the amount. So a 68-year-old was going to be getting, probably about, let's say 35% or 38% of the 800, which was still leaving them with $62,000, 62% of equity. In her case, because she was in her 40s, we're actually lowering that loan to value from 38 probably down to like 25. So there's 75% equity when we start. And we know that the value of their home is appreciating by somewhere between 2 and 9% a year. We average it at 4 when we do the amortization calculator. And in many cases, they don't really stay in the home their whole life necessarily. Right. But if they do, it would take quite a bit of interest, right, to accrue, unless, he was 90 when he passed and she was like, 60 something. it could be that they could owe more, but I'm thinking that $800,000 home is hopefully going to have appreciated enough, and that's what the lender counts on. And again, that insurance that they pay up front as part of the closing costs is again where the lender is able to make themselves whole by dipping into that account. So they're not so worried because the loan to values are so low.
That makes sense. And normally, I remember at the beginning of my career, we always said market appreciation is like 2 to 3% a year. We've had these past 5 years, 10 years be like 5-10% every year. Such wild appreciation. Okay, so that person is most likely to sell because they don't want to keep a big house, just
maybe
theorizing here. And there's still a lot of equity, so they can take that equity and use it to purchase whatever next property they want on the flip side of not staying there.
Right.
Okay,
Yeah.
that was super helpful.
Wonderful. Yeah, it was so nice to meet with you and your referral partners, and I look forward to talking with you in the future. Anyone that would like more information.
All right, reach out to us. Thank you all so much for your time and enjoy the rest of your day.
Take care. See ya.